Wells only and his guests are not responsible for any losses you may accrue for having weak hands. Where the haters at? Yeah, bitches still ain't showed up. And now, right, we got Hex, flawless uptime. People thought this was a joke. Now they're mad at the chart.
This is Wells only. Glad you guys can make it out. I'm making some claims that are pretty outlandish, but I can back them up. Boom. End of story. There is no other crypto out there, so don't get it twisted. If you don't understand where you're parking your money, you're going to pay the consequences for that, and that's just how the cookie crumbles. Boom. We're obliterating everybody, literally. There is nobody else that comes close to what Hex has done. Right? The reality is that I want to be rich as fuck. There's only one way to be rich as fuck. That's by sitting on your ass the longest. Yep. That's it. Yep. That's the secret. The guy well told you. Richard done told you. I done told you. Kareem done told you. Maddie done told you. Everybody done told you. Everybody done told you. Shit, motherfuckers still acting like they don't know. Appreciate that.
Yeah.
I appreciate that.
100% safe. There's plenty of games left.
Valiant done told you. Yo, everybody said it. Man, hey, you know what it is, man? Everybody done told you. Y'all's deep. Everybody. My God. Ex-Asians, bro. Everybody. Australians, man. Everybody gets me. Yo, when is it told you? Dollar told you. Everybody done told you. It's crazy. Alrighty, what up, everybody? A happy Wednesday to all. Just gonna go over a little bit of the recent ongoings, because things are a little choppy right now. So things are kind of set up, at least on the risk side, for kind of a bounce, and I'm gonna try to show you guys why. But you know, sentiment itself is extremely negative. Now, what that means is that everybody's expecting the world to end, and the market just isn't moving like that's what's going to happen, right? But the interesting thing is that you're still getting a lot of order flow that is bearish across the board. So this could just merely be a period of profit taking from the bear side, which is what's causing the consolidation, right? And by consolidation, I mean like sideways chop. So let me show you guys what I'm talking about. Let's see. Okay. There we go. Collapse. Actually, let me just get all out of this. All right. So right now we're just looking at a 21 day candle chart. Right. So every candle is 21 days. And what we're seeing, if you look, allow me to zoom in here, you'll see that the S&P futures have already broken a couple of trend lines to the downside. So that's to say, long term, the perspective is still bearish. Okay, because each bar is 21 days. So it's not like the bear market's over. However, we must keep in mind what's going on the interim, right? So when we zoom in, 5-day looks a little weak also, right? But we're also sitting on some support to a certain extent. If you look left, which is where you should always be looking, once you're at the right. So there's a lot of reasons for price to just do nothing right now. And that's kind of what it's doing, right? You just got price kind of chopping up in this 200-point range. And then lately, it's kind of just like been doing a whole lot of nothing. Because we had a nice thrust down. But in the past few days, it's just been dead, even though the flow is there, right? But you're also seeing the fact that at this point in time, sentiment's been so negative that maybe people have overextended their bearish positioning, right? Maybe the market give me a second, guys. Okay, I think it's safe. So the dangerous thing about points in time like these is that bears seem complacent in general. So the market could seem complacent in general, but is the market complacent in general? Hold on, got back up. Okay, I think they're finally gone for now. Why can't I see my comments? All right. So all right. So as you guys can see, the market's just like hanging on right here, right? And then when you look left, you see it kind of has a reason to be hanging on, right? Because you got some areas of support right here. A previous area of support, which was a previous area of resistance. So it makes sense for the market to slow down here. The question is, are we going to rally, see some kind of bounce, or are we just going to fall off the cliff? Right? Because this is the weird thing about markets. Volatility is still up. Sorry, guys. So if you look at, this is the measure of volatility for the S&P 500. Hold on again. All right. So we're back at what's typically considered a local high, right? Because what happens is that when volatility reaches this area, it typically reverts back to the mean. Will that happen this time? We don't know. Just noting it's in that area. Because as you guys can see, February 2020, it shot up to almost 100, right? Went up to 80 plus. So it's not like it can't go higher than where it's at now. It's just, are there catalysts to force that to happen that are not priced into the market, right? And this is what we have to take into account. And this is kind of the thing that's a little weird right now. It seems like when you look at the market as a whole, all the negative ramifications are priced in, I mean, we're basically on the doorstep of World War III, and the market's still hanging on, right? And this is basically, how much worse can it get, right? And this is kind of what causes you to think, well, how's the market positioned? And then when you think about that, you look at the fact that even though positioning is still somewhat bearish, right, and people are still taking bearish positions, the fact of the matter is that now the market is kind of leaning one way, and that's bearish, right? So that means that the room or the market is kind of set up for a bull move. So the question is, will it or will it not? And this is why we gotta look left, because it's kind of a probability here that it could see a bounce. Will it? We don't know, but it's good to be mindful of where the market's at with respect to everything else that's going on. Now let's take a look at Now this is just the S&P 500. If you look at the mid cap, it's going to basically be the same deal, right? A little support, previous resistance to a certain extent. And that's just looking further back. So we still got room to go before we reach the 2020 pre-crash high for this market. I think we already hit that. No, we still got some room before we hit that too for the S&P. I'm sure NASDAQ, we're way far away from that. Russell, this is mainly small caps in this measure. It's already there. So even more reason for it to kind of not do anything longer than most other indices. Let's see here. Here's the 30-year bond. If it wants to, hold on, I gotta turn something off here. All right. Hold on, guys, because I'm turning off. All right. So now we're looking at the 30-year. Now 30-year had the bounce as expected earlier in the summer, and of course, also as expected, the Fed came in and shellacked the rate with their rate hikes. So now the question becomes: have we gone far enough for the Fed to stop increasing the rate? And honestly, we know they're on a warpath, so the answer is no. They're just gonna keep destroying the market as good as as much as they can. So if you look at the chart for it, and this is just a 30-year. This is going back to 1999, and the reason there's a gap here. Well, actually, this doesn't even show the actual gap, so never mind. Doesn't matter. But let's just look at it from this point of view. As you guys can see, we're out of this major channel that price was in for the past 30, 40 years, because this goes back even further. Wish I had the longer term chart. But there's a chart that goes back to 1976 from inception of this market, and we've completely fallen out of that, right? So we literally have to look left, because that's all that's left. There's nothing else for the market to hold on to outside of whatever is being said, which is never a good thing, because that means there's nothing fundamentally there to support the market. And this is important to understand, because this market, interest rates in general, impact the rest of the market as a whole, right? Broadly. So these are things that matter, right? Whether we want them to or not, they do. And this is the 10-year. Let me just draw the lines on this one real quick. Or shall I say the channel lines? I mean, this is textbook. Textbook. All right. Yep. I mean, it just doesn't get more textbook than this. So Yeah, I mean, these are the things that they do with their words, right? Because as I've explained previous times, their objective is to talk the market off the ledge, right? They don't want to necessarily, like, they'll say soft landing, right? But you see that their actions clearly are opposing that. And these are the kinds of things that should stand out to you when you're analyzing what's actually going on, because this is how you really grab on to the edification, right, of what's being said and whether it's valid or not. Because if you're not really aware, and you're just going off of what you think makes sense because of what the surface appearances might be, right, based on what we are told to be true. These are kind of the things that get people caught off sides, right? Like in 2008, when everyone thought that nothing could happen to the housing market, but many things did, right? And the housing market still hasn't recovered from that. And these are the kinds of things that really keep people in these positions of inferiority because they don't respect information or the facts or whatever you want to call it, right? Um, and this is how, people fall from grace, for example, or people get left behind, right? Because it's one and the same thing. Because the question that becomes like, why didn't you see this coming and others did? And this is a constant thing, you know. It's like when these sanctions were instituted a year, damn near a year ago, about 8 months ago at this point. Anybody with any understanding of how economics works would, understood that there was no benefit coming from that action, right? And this is just pretty much very important to understand because of how capital flows, right? If we can't ascertain how capital flows, then we can't ascertain where the money's at, know where it's going to go. So then how can you invest if, you're just going to be putting your money where it might not ever gain any traction? What causes the price of things to go up? Demand. Outside of inflation, right? It's typically demand. So that means that people want to buy that thing. And when people want to buy that thing, that means that there has to be somebody willing to sell it. Literally the only way, right? So let's talk about the dollar now. Over the weekend, we had a article from Barron's. Let's see if I can pull it up. We had an article from Barron's. Not an article, excuse me, a cover, which is even more crazy because Barron's is well known for calling the top in damn near any market anytime it pumps a cover. So give me a second here. Let's find it. Here we go. So I'm sure I could literally do a search. This is from October 10th, 2022. Powerful greenback. US dollar is near a 20-year high. Who it helps, who it hurts, and 8 ways to invest. Now, the notion is to invest in the dollar. The reality is that if you do that at this point in time, after it's already ran from 2021 to now, in conjunction with the fact that it's been running since 2014, 2017, 2018, and now, right? These are all things that are true from 2008 to now. every time. In fact, let's do the search. Let's see. Let's see if this is. So what I'm trying to find is a place where it notes the Barron's covers, and because I've seen this like in an image form before. I'm mad I don't got this saved somewhere. Long story short, yeah, like this was a top signal. Let's see, April 22nd, 2013. Let's go look at the Dow. May 2013, April 2013. So let's zoom it in. Looks like we had some top-ish activity around that time. April 12th, and that was April 25th, I think it was. For the week ending April 22nd, 2013. All right, so if you bought April 22nd, May 13th, you made no money a month later, 2 months later. All right, the average Joe isn't going to be happy with that. They'll cash out. Or maybe they got lucky and held. Depends, right? But that's pretty risque. And that's the thing. This is just one. There's more scenarios. And damn, I wish I could just find them. Hold on. Especially for currencies. Like they have an abysmal record. Oh, let me see. Jesus, I'm not gonna find it. I'm not gonna find it. When I find it, I'll post it on Twitter or something. You guys will see what I mean. Because it's just not good enough to look it up here. But this is just important to know, right? We've been running hot already, rate-wise. We got a 75 basis point spread between where the Fed Fund sits right now and where the market is saying it should be in terms of where the hikes are. So long story short, the Fed is ahead of the market now, right? And this is why we're now seeing all this volatility, all these rate inversions, and this happened all the way back here, right? All the way back here. As soon as the Fed got rates to the point where they were higher than this spread, that was it. They were overstepping their boundaries. So now the market is really feeling the pain, and this is what we're seeing all over in multiple ways, right? Because it's not just about the dollar impact on the cost of goods here, right? It's really a twofold scenario that's taken off, because what causes the dollar to zoom higher again is merely the deterioration of other currencies and other economies, right? The dollar is merely the punishing tool because people borrow in that currency. The dollar is a funding currency. This is why it kind of behaves like the yen, and the yen kind of behaves like the dollar over periods of time, right? And we've gone over this before. Let me see if I can pull this up. Wow. All right. So dollar yen just keeps on zooming to 20-year highs. This is important because the yen, as I'm going to show you guys right now, is also a funding currency. So what that means is that when the market's in crisis mode, dollar yen does move lower. But what's interesting is that previous to that, the dollar yen moves higher every time. So this is like a warning signal. This is what happens when that thing plays out that the market was warning about. And what you're going to see is that is kind of the case ever since this happened. Because what we had before was 2008, right? Crash, economic crises. Of course, dollars getting taken to the woodshed all across the board. And in light with that, in conjunction with that, so was the Japanese economy because they couldn't debase their currency versus the dollar because the dollar was getting debased versus the yen, right? So if the dollar versus the yen is moving down in value, that means the yen is increasing in value. So how do we confirm that? All we have to do is invert this scale over here. So see, same dollar yen, but now from 2007 on, you had the value of this going down, but it's going higher, meaning the yen itself is the instrument going higher. So that's how you can confirm that. But this is putting it back on this regular scale. But here, the Central Bank of Japan, intervene in the market and essentially just shut it all down. Like I can't even remember. I was in college at the time still. I can't even remember how many trillion yen it was, but it was crazy enough to cause the market to do all this. This was all because of that one BOJ action. All of this. And this was 3 years in the making. Right? And these are the kinds of things that currency markets do. Right? Because what happens is that the market hears the policy, or at least the message from the policymaker. Then it takes that message to heart. But what the policymaker then has to do is drop some crumbs and make it look real, right? Do some buying, do whatever they got to do, right? If they intend to do it, they're going to do it. However, the market has to believe it. And that's the catch, right? If the market doesn't believe it, the market isn't going to react. And this is why I really impress upon you guys the importance of sentiment, the importance of understanding that when these central bankers are talking, the market is hearing them. It's not necessarily listening, but it's hearing. If that makes any sense. Because if they were paying attention, wouldn't even be trading in dollars. Pretty simple. Because there's no value to be had in that paper, right? It's just literally paper. And these are the things that, the market is letting us know that it understands this. But the thing about it is that because the dollar is a reserve currency, it doesn't look that way. So you get weird headlines like this, right? Because I guarantee you, nobody in this chat is feeling like that dollar is really doing anything for their pocket. Pretty confident that's not the case. And these are like the important things that stand out to those trying to understand what is going on, right? Because how else are you supposed to grasp what's on the other side of risk? I mean, imagine that being what's sensible, right? After I don't know how many year run. Let's go back. 4-year run or something like that. It's been running nonstop since 2021, and then before that, 2018 was a low. It almost tested it, right? Market structure, and I've kind of tried to explain this to you guys before, how markets retest that bottom made area, and this is what the dollar came and did. From 18 to 21, you see that markets always try to come back and retest this area. So what's the lesson in this little tidbit? And now this only applies to real markets. Crypto's a whole different story because that's just not the same thing. But the moral of the story here is once you miss a bottom, you know that the market is more than likely going to come and try and retest it at some point in the future. So this is what we saw here, right? And this is why the market was clear for takeoff after that. I mean, that's just basic auction mechanics. That's a topic for another day. But these are things that are important to understand, right? Because now we got combination of that plus combination of this plus a combination of a whole lot of other things that are going on in the world. You have a bunch of economic partnerships being built up that have nothing to do with the U.S. You have countries being explicit in their lack of interest in using the dollar. You have explicit messaging from the U.S. administration detailing that they're not going to do anything to help the energy situation in the U.S. at all, whatsoever. In fact, what they do intend to do is to seek out to be able to buy from other producers. They want others to increase their production, but not for the U.S. to be energy independent. Something to think about. Because these are the things that highlight the significance of policymakers and their decisions and what they're doing and how they impact you. Because this ultimately is going to impact every facet of your life. Because if it costs a lot to make anything, which everything is made using petroleum, damn near, literally, produce is grown, right? And if those crops are being tended to, odds are they're using a vehicle of some sort. When they're sowing those seeds, they're using a vehicle of some sort. When they're growing livestock, the feed, it's made with that same petroleum. So the cost of that feed goes up. All these things are tied together. And this is why it's important to understand everything. Otherwise, you're going to be out here believing Joe Biden when he's telling you that some business just wants to screw you over. And they have the goal to insult the average person's intelligence by going on live TV and just acting extremely ignorant with regard to the fact that any producer or any business has input costs, right? And if any business is to make any profit, well, they got to charge a little bit more above that, even if it's 10%, right? And gas stations are actually one of the worst businesses to run if you don't own that, all of that, right? Like if you're just licensing it out and all, I mean, the margins are pretty slim. You don't really get that much of a cut, mainly because of all the taxes that are embedded in the cost of a gallon of gasoline. Because let's see if we can find this interesting map. Let's see. I was hoping to see if I can find a map. See if I can find a map. Bam. All right. So, as you guys can see, if you look at this legend over here, and this is, what website is this? I don't even know. It's gasbuddy.com. Yeah, gasbuddy.com/gas price map. I'll put the link in the chat here so you guys can. Okay, maybe it doesn't want me to copy that. All right, there we go. So you guys can check that out. But you got to ask yourself, how is it that gas is cheaper in one state versus the other? right? And this is because some states choose to tax their citizens more than others. As you guys can see, I mean, Commie Coast is all about taxing the hell out of their citizens, right? I mean, the average cost of a gallon of gasoline is greater than $5.43. Very rare is a place where it's less than $2.39. Mississippi pops up, some place near San Antonio, place near Austin, a place near Houston. But I mean, it's like probably like a total of 10 places that I can see in the map. I mean, it's just not that many. Everywhere else, you're going to be greater than $3. You go into a place like New York, New Jersey, forget about it. They try to be like California and all those ridiculous states over there in the West Coast. Look at Illinois, Michigan, other places that we know are trying to play that commie game. And of course, they're going to impose ridiculous taxes on everything, right? And this happens because people just don't know. And when they don't know, they can be lied to and they can be told nonsense like the gasoline station is overcharging you. I mean, I remember when I was a kid, that's what I used to think when I was a kid, right? Because you don't know. But for an adult to think that, wow, wow. It's one thing for you not to understand why the dollar's at a 20-year high. It's another thing for you to not know how businesses make money. Like, those are just two completely different things, right? And if you're an adult, you really should know that it takes money to make money, right? And if you don't know that, then you should just stop just opining on anything, because your opinion is so irrelevant that it's sad, because you don't even know how things come together in the real world. So you've never even bothered to find anything about anything out. That's what that means. And that's why your opinion is irrelevant. It's not anything personal. It's just a fact of the matter. Imagine not knowing how a business operates. I mean, how do you not know how a lemonade stand works? This is where we're at. It's bad enough that biologists don't know biology. We got to draw the line somewhere. I'm not a scientist, so I'm going to shut up on that. But when you're going to sit here and say you don't know it take 5 cents to make 10 cents, we got a problem. That's just basic, right? So this is the kind of thing that you got to pay attention to, right? Where is the sense in that? And there's not much sense in any of it, and that's kind of the point. So when you start to add all these things up, it's a kind of a dire picture. I mean, today the meeting minutes came out for the Fed, Fed's most recent meeting, and the market didn't even care. I mean, this is a reaction from the market. If you look at a 30-minute bar, 21-minute bar, market has been chopping for the past couple of days, right? And this is what I'm talking about. Had this low or this low made here, market, this was, yes, all week has just been nonstop chop. Market really hasn't done anything. And this is kind of how, if the bears don't take over in terms of pushing flow, pushing price with their flow, this is how bounces happen. And this is kind of what it looks like we're shaping up for right now. Just kind of what it looks like. RSI got positive divergence, right? Or MACD and RSI both have positive divergence. And I mean, this is just on a daily basis as well. You got positive divergence being built up. As you guys can see, this is not the first time this has happened. This has also happened before. But of course, longer term, we still bearish. Let's not get that twisted. We just got to understand that, even waves in the ocean have different amplitudes and directions sometimes. And we're just at that point where there's going to be daily conflict with what the bigger picture is showing us. And clearly it's still bearish, right? But here's something to note. If the 8-day picture, right, stays positive in terms of the MACD, right, because if you guys can see, it's very negative looking on the chart, right, very negative looking. But again, we got some support here. Now, the only reason I'm talking so much about this is because this is really like the measure for risk worldwide, the S&P 500. Otherwise, I wouldn't really care. But still haven't closed this gap. Now, what you would want to see for a continued down move is for these red histogram candles to start popping up, because then that would mean that this line crossed over the orange one, the blue crossed the orange one. That's what we ultimately want to see, because if it doesn't, that could imply that we're going to get a bounce. Now, this is on an 8-day basis. Okay, that's pretty long term. On a 5-day, it doesn't look like that's what's going to happen. On a 3-day, kind of looks like that's what's going to happen. On a daily, kind of looks like that's what's going to happen too. So you see, you just got to find those points in time where the majority of the images resolve, right? And if you go out to 13 days, it still looks negative, right? And that's on a MACD basis. But if you pay attention, there's contraction on the averages, right? And typically that leads to recovery of prices. And you got the RSI down here. And then sometimes, you're just not going to have the time for the market to recapture the mid-band, and it'll just run through, kind of like what it did here, right? You had it touch, bounce, hit it, reverse, touch, and bounce, and just keep going through. So this would be something to keep an eye for on a scenario basis. Now let's get to the cryptos, because that's just market risk, right? That's just general market risk. We'll finish it off with this. Hex on the other chains is down pretty significantly relative to the highs, probably down like 75% relative to the highs. I guess people decided to take their money off the chain, whatever they put in, I guess. I don't know. Is this even the right one? Liquidity is only 20,000 here. So I don't know if this is the right chain or not. Let me take a look. $141K. Just ETH fair or ETH POW. Okay. So this one has 141,000 in liquidity. But either way, same story. About 75% down. Let's get a measuring stick out here. From the top, 90% about from previous peak to previous low. As of the previous close, 86% down from the high. So there you go. Now we completely in line to a certain extent. Let's take a look at ETH Hex on mainnet. Today would be great. I mean, is it my internet or do these sites just suck a lot lately? All right. So we're still going sideways for Hex. Just as detailed back in the day. It was just going to be a lot of sideways chop because we just hit that point in time. And we just hit that type of sentiment, right? And we hit that extreme sentiment back then as far as Hex goes. And I'll tell you guys what, people are ignoring it right now. Pay attention to that, because that's what happened back at the lows for Hedron. That's some alpha for you. Take that one to the bank. Everything else is pretty much the same, right? Icosa is like Hex, right? If you don't know what Icosa is, it's just a stable coin, it's algorithmic stable coin that's a reflection of Hex with the T-share rate as a booster. Basically what it is. And if you're looking at this chart right here, I mean, this chart looks very, very, very nice. Very nice. So something to take into account. Let's see. What else have we got here? It's worth looking at. Hedron, what's Hedron doing? Still grinding. Let's see what this bad boy is doing. All right, still in the channels, still holding strong. Man, it's just riding the wave, you know. Price structure is still maintaining a positive position for price. And what that means is that as it travels through time, even though you got red candles, the red candles don't turn into this. And then the positive thing on top of that is when you see, when you see big sales move through, doesn't really impact price anymore like it used to. And that's a positive sign, right? Because it's kind of like Hex. You used to have 9-figure quantities of Hex being sold, you know, then 8, then 7. And you still see 7 nowadays and 8, but it's much far and few in between relative to what it used to be. And this is the distribution of liquidity over time. You know, and the same thing is going to happen in Hedron. Same thing. I mean, as we go through this list of transactions over the past couple of hours, you don't really see huge USDC values coming out. And then when you do, this was yesterday, you know, it doesn't impact the market like it used to. I mean, this was yesterday. This 36,000 USDC transaction for 10 billion Hedron, was yesterday in the middle of the day, Eastern time. And look at where we are today. Didn't even matter. Where is it? Here it is. Right in between here. Market ate it. Didn't even care. And these are the kinds of things you got to understand if you want to really grasp what a market is doing. Right now, why does this work for Hex, Hedron, Icosa, all the real cryptos, and not for the rest of the market? It's very simple. The rest of the market is manipulated, right? It's tied to fake liquidity, manipulated liquidity, and we see it all the time. When you look at the amount of flow versus stock, right? And that's the volume versus the supply that's traded across the chains. I mean, Hex stands out every time because we're actual on-chain liquidity, right? If you go to dexscreener.com, all the things sucking up gas is what you're seeing up here. It's funny. Hex is number 71 on this list of thousands of coins, right? Where it's gate kept and all that stuff. But on chain, you can't really hide that, right? And this is just in terms of transactions. This is not in terms of anything else. So these are things to keep in mind. You know, how do things actually work? How does a dollar flow into a crypto and vice versa? How does a dollar flow out of a crypto? These are things you got to fully understand in order to grasp the big picture and view where things could be going. Because nobody really knows. All we're doing is making our best educated guesses, right? And that's critical to understand. Because that's how you can separate yourself from making a dumb mistake from a good decision, or at least a decent one, where you don't blindside yourself into doing something you didn't want to do. Because that's easy, right? That's what losing money is, and that's easy to do. We do it all the time. So be mindful of all the headline risk. Be mindful that the dollar is near 20-year highs. Be mindful that sentiment is extremely negative. However, price is not really reflecting that. Be mindful that the T-share rate keeps going up. This is how people get left behind, right? Understand the game that you're playing. Devise a strategy that makes sense for the game. Try to find a way to position yourself for success. Don't just jump into things because you know it seems cool. Like, this is your money. This is your hard-earned money. Treat it with respect and it will treat you the same. Otherwise, not going to be a good look, right? You're going to be buying here and selling down here. And then what's going to happen is the market going to keep bumping around and it's just going to crack. But you're going to be buying down here thinking it's going to recover, because that's how the market works. Doesn't care what you think you know. These are things that are very critical. How does a market fluctuate or not fluctuate, right? When you see the rest of crypto, hell, let's look at Bitcoin just because I haven't looked at this thing in like weeks. Oh, actually, yeah, let's look at this. Give me a second, because this is pretty importante. So what I'm about to show you guys is essentially percent of stocks and their position relative to their moving average. Now, why does this matter? Think about it like this. If we're looking at the entirety of the market, hold on, let me go to another one. We're looking at the entirety of the market. Let me go to another chart real quick. Now, what you're looking at in these moving averages is 3, 5, 8, 13, etc. And I'm just doing a Fibonacci count, right? That's what all these values are, just moving averages based on the Fibonacci count. And if price is below it, typically that's bearish. If price is above it, i.e. the moving averages, typically that's bullish, right? So what we're seeing here is how, since price is below constantly the short-term moving averages, price is bearish. So you look to sell the rips. And this is what the current status is, right? This is what we know to be true. Now, when we go look at what is called breadth, these measures are letting us know the percentage of stocks that are trading above or below those moving averages. So this is basically saying 23% of stocks are trading above their 5-day moving average. That means 66% or 76% are not. Simple. 20-day moving average, about 29% of those are trading above their 20-day high or a 20-day average, moving average. Right, so that means that 70% are trading below the 20-day moving average. 50-day, only 16% of stocks are above. That means 84% are below. The 100-day, you got 25. So you guys get the picture, right? This is 150-day at 22%. This is 200-day at 20%. And this is the advance for today. Those advancing stocks in the NYSE. And the reason I picked the NYSE is because I think it grabs like 5,000 stocks or something like that. So very big broad measure of advancers versus decliners. So this is kind of what you want to capture as big a picture of the market as possible. And that's really all I'm trying to do here. So basically, the market is still structurally bearish, right? Because the majority of the stocks are below their moving averages, right? And this is important to understand when we're taking into account things that are tied to the stock market, like Bitcoin, right? Because Bitcoin does not stand alone. It's clearly tied to the stock market. It's moving sideways like the stock market, right? And when it goes up, it tries to go up with the stock market. And when it goes down with the stock market. So it's clearly tied. Ethereum, same deal, right? And of course, they have their own independent scenarios going on. But yet and still, the liquidity is what ties them to those markets. And the fact that the majority of the persons that interact with this system think of it as a stock market, well, guess what? That's how they're going to treat it. Pretty simple. So on top of the liquidity being bonded by those participants engaging, the psychology is also transferring over to the price action into these so-called products or whatever, these cryptos, whatever you want to call them, these digital assets. And this is important to understand because this is ultimately why, you have people shilling the hell out of it for this whole period of time, only to see a drop 70, 80%, whatever it is, right? And we're still at risk of dropping even further because the market is still structurally bearish, right? Just went over it elsewhere with how stocks are looking. This is no different. And as you guys can see, moving averages are letting you know that. And that's really all you can really ask for, right? I mean, you want a clear picture of what price is doing. You don't want to be guessing what price is doing because price doesn't lie. Everything else does, though, but price will never lie to you. That's pretty much all I got, guys. I just want to give you guys a little quick update, kind of give you a little footing because things are kind of in limbo right now. As far as the markets go and directionality. So these are things to just keep in mind. As far as crypto goes, the dollar cover on Barron's is pretty significant. That's a major positive divergence signal for crypto in general. That does not guarantee that the rest of the fake crypto market is near its bottom. I don't think that's the case. And yes, that was just a gunshot and another one. I think that the rest of the crypto market still has risk to the downside, whereas we're pretty much done. And if we do see any more motion to the downside, how much more can we really see with all the liquidity that we have sitting below 3 cents? Not much. And these are the kinds of things that you have to really sit here and think about when you're playing out what could and what couldn't happen in the future. Because, unless you're buying a day, you got to think about what could be happening in the future if you're trying to pay to play later, right? And these are the kinds of things you guys just got to keep in mind. So thank you guys for tuning in. I hope this stream was a little helpful for you. Go check out my man Hexo. Peace. Right? The reality is that I want to be rich as fuck. There's only one way to be rich as fuck. That's by sitting on your ass the longest.
Yep.
That's it.
Yep.
That's the secret. The guy well told you. Richard done told you. I done told you. Kareem done told you. Maddie done told you. Everybody done told you. Everybody done told you. Shit, motherfuckers still acting like they don't know. Appreciate that.
Yeah.
I appreciate that.
100% safe. There's plenty of games left.
Valiant done told you. Yo, everybody said it. Man, hey, you know what it is, man? Everybody done told you. Y'all deep. Everybody. My God. Ex-Asians, bro. Everybody. Australians, man. Everybody gets me. Yo, when did this told you? Dollar cost told you. crazy.